Welcome to Friday's Market Wrap-Up here at TGO, or Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and two key levels surpassed today. Amazon just went over $1,800 a share, and psychologically, the S&P topping 2,800. But interesting market action going on right now, especially with the financials getting launched off the flight deck with Q2 earnings season. We're going to cover that in a couple minutes. But let's take a look at our one shot, one kill this week. We put on a weekly options bull put spread on Monday, the 17-12, 17-10. Doesn't seem that long ago, but Monday seems like a year ago when you look at these prices. So we put on this bull put spread Monday afternoon, looking to risk $5,400. So if Amazon absolutely imploded this week for whatever reason, the most you could potentially lose on this was $5,400. And that's based on 30 contracts, folks. That's the risk. Just like an aviator, an options trader, before you go on any mission or fire any trade, you take a look at your what is my max potential loss right here, $5,400. If you were okay with that, you could have potentially made, as of right now, $2,100. Obviously, I'd close this trade. You never know what's going to happen the rest of the day. You know, Jeff Bezos has a news conference at 3:45 this afternoon, announces he's the Antichrist, and the stock goes to zero. You don't want to turn a 99% winning trade into a 100% losing trade. Trust me, I've been there, done that, got the t-shirt. So great looking trade. What did we also talk about on Monday? I said, you know what, folks, it is time to get long volatility. For the first time in a long time, I actually put on a debit spread. We put on a bear put spread on the S&P 500, and what happened? The next day, the market imploded. I wish I was that good all the time, folks, but it was awesome. This bear put spread was up 40% in a day, about $800. So a lot of members took those profits as well. So looking at about, what's that, $2,700 in 2-day profits on two trades here at TGO. Had an absolute blast this week. And we had some great full throttle training. Wednesday night, we talked about getting long volatility and putting a volatility hedge on, because this kind of looks like the golden arches right here. Look at this. This bounce off the 200-day moving average of the S&P 500, back to the 50-day, bounce, and back to the 50-day, and then bounce. So let's do a quick debrief for the week. Right out of the gate, one of the reasons that we looked to hedge was out of the blue, you know, as the president's on Air Force One heading over to poke NATO in the chest, $200 billion more in Chinese imports. So the market started to implode on what? Oh my God, he's serious about this? Well, folks, last week it was $34 billion. This week it was $200 billion. And the news that was a little worrying the other night was stocks dip as Mnuchin, our Treasury Secretary, admits trade talks with China have broken down. That's not a good headline, folks. And remember, one of the wisdoms here is that the market only cares when it cares. Meaning, remember all these massive swings back here and a lot of this red? All this red was based on what? Trade war fears, renewed trade war fears. So folks, the $200 billion in new tariffs, Mnuchin said talks have broken down. What's that mean? That means we sat in a room, we said here's where we are, they said here's where they are, and we tried to meet in the middle and we didn't, so we all left. That's not good. So I know right now the shiny red ball the market's running after are Q2 earnings, but it's going to rear its ugly head again. Also got some really good news on the job openings front. I think it was Wednesday, the JOLTS report came out, which is the jobs open. How many jobs are open out there? And for the first time in a very long time, there are more job openings than unemployed workers. Let me just detour and jump on my soapbox real quick. Why is there one able-bodied person in the United States of America on unemployment? I'm not talking disability, or if people can't work or something like that, they should be on disability or other stuff. There should not be one person in this country that is on unemployment. There are more job openings than people I get it, man. People want to live in their parents' basement and eat Cheetos. Good on them, but I ain't going to pay for that. So good news on the economy there. Some mixed news with inflation. So, yeah, there's a lot of jobs out there, but as we saw last Friday, which seems like a year ago, was what? Average hourly earnings. average hourly earnings went down because inflation's going up a little bit. So I think the Fed got a little bit of air support this week for their efforts to raise interest rates 2 more times this year, and then next year I think they're really going to get on their stair step up game plan, and that's going to segue over to here as we talk about the bank earnings. Real quick, President yesterday in an interview with I think the Sun more or less slammed Theresa May for screwing up the Brexit. More or less saying, hey, man, the people voted for Brexit. This lady's kind of made it Brexit not even light anymore. It's like negative Brexit. And he wasn't too thrilled with it, gave an interview, and he had to do a little rug dance at a press conference this morning. So, but I think at the end of the day, obviously in front of the cameras, everybody's buddy and shaking hands. But I had an absolute blast. When was it? Wednesday with the president at NATO. I mean, seriously, folks, they're not paying their fair. So the people we're protecting aren't paying their fair share. You are, as an American taxpayer, you're paying for the defense of these countries, and you're paying for the defense of Germany, who is now going to get 70% of their energy, nat gas, oil, you name it, from Russia, the enemy that we're supposed to be protecting them against. Putin did this in the past, folks. A couple years ago, what did he do? He turned off the spigots, man, and was going to freeze Ukraine. And they could have gotten their energy from Ukraine, folks, a country who wants to be in NATO, who wants to be free. Remember, Clinton, Bush, Obama. No, Ukraine, you can't be in NATO. It'll really piss Putin off. Nice job. Well, we did a good job of not pissing Putin off because he invaded Crimea, took that back, and he invaded eastern Ukraine. It's ridiculous. Anyway, so that was a fun week. Now let's get into bank earnings today, folks. Just like Q1. I nailed this. JP Morgan, I think their profit was up 18%. Wow, that sounds great, Wiz. 18%. Citigroup, higher profit, stronger economy, blah, blah, blah. Oh, wow, Wiz, this sounds great. Yeah. JP Morgan's up 47 cents. I said this yesterday, guys. We looked at the at-the-money straddle, and I was shocked that it was so tight. It was like a $4 at-the-money straddle. The market did not expect a big move on JP Morgan earnings, and man, were they right. I got to be honest with you. It was a little Goldilocks, right? So Jamie Dimon said, yeah, the trade war and tariffs and all that stuff are a worry, but you ready? So far, this was affecting psyches more than economics. So we're kind of getting a shrug here. I mean, they did great. They showed strength in several areas. Their trading revenue, right? It's called FIC, fixed income currency commodity, FICC. So they did pretty damn good with their FIC, and some other areas. Interest rates, look at this. They got a boost from low but rising interest rates. So as the Fed starts to crank up interest rates the rest of the year, as I said, maybe 2 more times next year. So we might get back into JP Morgan here a little bit. We just got to see. They're flat right now. I get that Jamie Dimon's saying, hey, the fact that we might get into a full-blown trade war isn't really hitting our bottom line yet. So this is an interesting reaction, folks, because here we are right here. See where I'm circling on the chart right here? This is where Q1 earnings were, where JP Morgan, Citi, Morgan Stanley, Wells Fargo, everybody said what? We absolutely printed money. This earnings period makes this one look like the second coming of Christ. What did the market do? It sold off. As I've covered many times, I think this January rip your face off rally was Q1 earnings pulled forward, right? So this little bit of the shrug on earnings. I mean, the Dow's up 70, 80 right now, and the S&P's up 5, 10, whatever it is. Bank earnings weren't super on fire. Okay, the outlook is kind of good, and but we're a little worried about a trade war. It's a little porridge, man. It's a little Goldilocks. The financials coming out, folks. So we'll see. Wells Fargo actually was a miss, and that means more to me, to be honest with you, than these blue blood banks at JP Morgan, Morgan Sachs, or JP Morgan, Morgan Stanley, and Goldman Sachs. Wells Fargo is what? It's mom and pop, home, auto, small business loans. So a Wells Fargo miss is, I got to dig deeper and read all that stuff. But here we are on Friday, folks. S&P tops 2,800 for the first time since March as the yield curve collapse continues. So, and this wasn't good news today. The University of Michigan consumer sentiment goes to 6-month lows as people are starting to worry about a potential trade war. So a lot going on in the markets, folks, but net, it could have been ugly this week when, we were doing our full throttle training and the president blasted out the $200 billion in new tariffs. But hey, man, the market only cares when it cares. And this week it decided not to care. But when I see this, folks, when I see a market going up with a lot of potential stuff in the background that's bad, this is why this week we talked about getting long volatility, right? This is why this week we talked about putting a bear put spread on the S&P 500, and we were right in one day. So with the VIX getting slammed, we're almost down to 12 here, folks. When do you fix your roof? On a beautiful sunny day, man. You don't fix your roof when it's pouring rain out there. It's too late. So with the VIX down here at 12, it is absolutely time to get long volatility if you didn't this week. Remember one of my wizisms. When volatility is cheap, you buy it. When it's expensive, you sell it. Right? And the VIX is a heart rate monitor, folks. The market freaks out. Okay, that freak out's gone. Nothing's going wrong. Everything's great. Oh, my God. Trade war, market freaks out. Then heart rate comes back to normal. So you can get in and out of volatility, folks. And if you want to learn how to do this, just go to our homepage, topgunoptions.com, and you can take a 2-week test flight into what we do here at TGO. If you have no idea what getting long volatility means or what a hedge means, just scroll down to where our beginner, intermediate, and advanced 2-week test flights are for $38 for the price of a bad bottle of Pinot Grigio. You could get a 2-week test flight into that weekly options program and our primary live trade brief, where we covered those 2 trades this week, the hedge and also the weekly options Amazon trade. So we're having a blast here, folks. So just go to our homepage and take a 2-week test flight. Okay? All right, folks, I got to run. Got to take a look at the portfolio, do some trades, and enjoy my Friday. So have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. I'll see you Monday afternoon at 1 o'clock in Weekly Options.